we hear so often ESG being expressed in cute cliches, profit with purpose, force for good, all these nice things. But what does it really mean in changing people's lives and enhancing profitability? Mervyn spoke extensively around the role of corporates. And I just wanted to bring it down to where private equity interacts in Africa, because it's really in the SME sector. And as the only formal institutional investor in the unlisted SME sector in Africa, which is where really we're going to create our jobs, we're going to create our skills transfer and create our GDP growth, etc., private equity plays a vital role. Tell us about Golden Lay. You invested in the largest egg-laying operation in Zambia, actually in the Southern Hemisphere, if I'm not mistaken.
So, yeah.
Single farm, yeah. And let's be honest, invested in a farming operation that maybe hadn't been exposed to some of these principles, and management's response to the application of ESG on the ground, particularly with some of the integration work you've done in the vertical integration in the supply chain.
Yeah. I mean, the simple answer is it's very challenging with the management team. I guess, as we've heard this afternoon from the governor, we're the generation that's been trying to educate ourselves, I guess, in terms of what we need to do going forward around sustainability. And then taking that to our portfolio companies is an even bigger challenge. Certainly, I think, looking at Golden Lay, but I think a lot of our portfolio, the types of businesses we're backing, the types of management teams, they haven't come out of big business, they haven't come from Unilevers and Nestle's, etc. So they're not necessarily privy to all of this. So now we're taking the requirements that we impose onto these businesses to trying to get them to change and adopt. So yeah, we've got the big stick, we've got the legals, so we put it on their legal contract to try and make them behave, but it's more about influence. So we've got to get into these businesses and educate and influence and get these companies to understand why it's important for them. So for Golden Lay, it's been important to get them to understand the impacts of biosecurity and really getting them to look into the eyes of what's the future buyer of this business going to want. Typically we want to sell these businesses to big businesses because that's where we believe we're going to get our big exits. So it's really trying to get them to look into the eyes of what is a big poultry operation from South Africa or a global poultry operation going to look at when they come to look at this business, and what are they going to want to see. So let's now start dressing that business up. So it's not just about driving EBITDAs and getting a multiple of earnings, but it's actually getting the business positioned within its community, just making a world-class operation so that it's attractive to a buyer.
We were talking about disclosure and using communication to affect the perception of value of these intangible assets in buyers. And as you approach your exit strategy, Stuart, maybe what is the role for the communication of this type of intangible value or less obvious value in shifting the perception of buyers when you approach your exit strategy?
It's huge. As you say, you need to be able to compare these businesses on a global stage. So, we don't want someone saying, oh, it's just a little operation in Zambia. Yeah, it might be the biggest operation in Zambia, but therefore, we can buy it at a knockdown price, we'll go and fix it up. So, we want to do all the heavy lifting first, improve these businesses. And they need to be comparable with South African, with global businesses so that they're attractive for these guys to buy them. So, and we need to be conveying that message, so we need to be reporting on this as well, which we are starting to do. Admittedly, I guess with these funds, early days, we do tend to focus more on the financial reporting. Mm-hmm. We've now just developed, we're in our 4th year of investment, so we've just developed our own impact brochure to start telling, 90% of my capital is coming from DFIs. So starting to report back, which they're more interested in. They're more interested in the impact report than they are on the financial report.
We've got 2 renewable energy players in a row, so I'd like to ask you guys, in terms of your ability to raise funds, Chris, especially as you're going into your 2nd fund now, is it still as sexy as it was 5-10 years ago? South Africa pioneering the RE revolution and lowering the cost of capital, being able to attract LPs. How is the renewable energy debate in the emerging markets enabled you to execute your strategy more efficiently?
It's absolutely what we believe to be the next revolution, and that is about clean energy and bringing affordable, reliable electricity, particularly in Africa. To many countries have 80% people that don't have access to electricity. There's a direct correlation between between access to electricity and the Human Development Index. So, and South Africa didn't pioneer renewable energy. We were quite a late player, and it was quite difficult to convince investors because of our nascent markets back in 2008 when we started our first fund. But it's absolutely center stage. I don't think there's a single journal, newspaper, television documentary that goes past in a week without some mention of a lighter footprint, resource efficiency, clean energy. And renewables in South Africa is a particularly interesting because, one, it has country specific aspects that make it interesting. Certain aspects were embedded in the procurement program, I think very cleverly by government, which obviously obliged local ownership. So the whole principle of limited economic leakage into a local area. And those were obligations for bidders in these energy projects. And that's actually gone a long way to bring local ownership, and although it's just on a perceptual basis initially, but then through an active training and capacity building, over the 20-year life of the asset, that provides tangible revenue flows into those areas in which local communities can then decide how to deploy those funds. The other important aspect of bringing ownership of those assets is in other assets we've seen in Africa, they often get sabotaged because local communities were excluded. There was not the integrated shared value approach to how you structure. So the structure of these transactions is all important. Obviously, renewables in itself is a global good. The air is a common property regime, and so I think the global citizens benefit from renewable energy in theory wherever they may be by reducing greenhouse gas emissions. The part, so that's a good story, but how you implement it is all important. I think the difficult part for us, because we also look at a lot of proprietary technology platforms, is in trying to gauge if it comes with a disruptive business model, which is the latest jargon, is you don't really know. The law of unintended consequences is a difficult one. In the long term, you don't know whether that disruptive business model in the longer term is actually going to be net positive. And I think that's where a large amount of rigor needs to go into, particularly the deployment of new technologies and providing growth capital.
Just a quick snap poll before we move on. Out of the five of you, how many of you feel that being a majority shareholder gives you sufficient clout to be able to exercise some of this subtler thinking into action? Or can you do it as a minority shareholder? Do you have to be majority? So just quick snap. You don't have to be?
No.
We're indifferent. I mean, I go back to my first point. It's about influence. In my view, whether you've got 70%, whether you've got 25%, you can have 70. Are you really going to force management to behave and do what you want to do? It's got to be influence.
Yeah, you agree?
Got to create a business case for them. I think if you're not able to articulate why it should work for them, and I think you're going to struggle to, no matter what your shareholding is, to implement meaningful change. So for me,
Sia, you agree?
It's definitely a business case.
Yeah, no doubt, James. I do agree. So certainly in a lot of transactions that we get involved in, we're brought in as an empowerment partner, and we're seen as a party that's bringing in empowerment points rather than being an active shareholder. Yeah. But I think it's very critical that at an early stage, while you're still building up a relationship, before you even execute on the transaction, that you do put it across the table that you are an active manager and that you want to participate in the strategy of the business, and certainly what is critical for you to get out of the relationship, not just on the financial side, but also in terms of transforming the organization.
Mike, on to you. Do you want to take us through your CSP project? I mean, your pioneering project and some of the lessons learned that you went through from that.
On the CSP project, our initial project, the founding project of our fund, was a concentrated solar thermal project, it's I think again it's been a fantastic demonstration of the change in the energy program in the country. It differs from solar PV in the sense that concentrated solar power has got storage capability, which means it's a dispatchable project. It can put power onto the grid when Eskom needs that power, and it isn't intermittent power like other renewables. So it's a really fantastic example of what what technology is thrown up by need, by the fact that the need to move away from fossil fuels, there are technological alternatives. And this is just one example. And it has got hugely important social impact. It's a 5.5 billion rand investment near a place called Groblershoop in the Northern Cape, which I doubt anyone's ever been to here or heard of. It's a tiny, tiny town. Yeah. And it's going to have massive, massive impact. And we have to acknowledge that impact's not always good. It's an influx of 1,000, 1,500 workers into an area. It brings issues of alcohol abuse, of prostitution, of so forth. And I think, again, it's a question of being honest, of trying to make sure that the project company really looks at those questions properly. They're external to the project company. It's very easy to externalize them contractually. And the question is whether we can make sure that we do our job and make sure that we take responsibility to internalize those into the impacts of the business.
Danny, you kicked off really as FNB's CSI program, right? And how has that served their corporate interests as an LP? So as a funder, as a provider of that seed capital and meeting their social objectives in the work that you do for other corporates, I'm sort of interested in if you could explain, because obviously corporate South Africa has a role to play as well, and what can private equity do to help that?
To some degree, we were a part of First Rand, and we're careful to differentiate CSI from what we call enterprise and supply development, because they're two very different things. And what their challenge was is they saw the need to try and take what was being perceived as a tax, this B obligation to invest in small businesses, look at their core business and say, surely there's a solution where we can fill what we call the missing middle. There are a number of businesses that we don't naturally bank because they don't fit the traditional credit criteria. Private equity only looks at deals of a certain size because of the economies of scale. But there are good businesses in this. I'll use the word SMME because I think when you say private equity deals with SME, we definitely deal with the second M, the more micro type of businesses.
The silent M.
Yeah, the silent M. And I think that the realization was that there are a whole group of businesses there that are solid businesses that can grow, that can produce, IRRs that are very respectable, but because of the amount of energy it takes to do the due diligence, etc., the size of the transaction doesn't make it worthwhile. And suddenly with this patient capital, it opened up this opportunity to get into what is very much, in our mind, a strong contributor to any economy and very much resilient job creation, which, as we all know, is central to South Africa going forward as a nation. So we were able to set up this fund. I think, massive kudos to First Rand for being ambitious in the way that they seeded this fund. There wasn't really best practice out there as to how to do this. The other advantage of it is not only is it looking at trying to solve a distributional value chain problem for First Rand, but you can also partner with corporates and try and use that capital to grow businesses in their supply chain. So you really can not only solve the supply chain or distribution issue for the bank, but you can at the same time use that capital to invest in businesses that otherwise wouldn't have been able to break this sort of chicken and egg scenario. So yes, that was kind of what got us going. I think that what's important just to note as well is that we actually started more from what would be called a technical assistant perspective. So we came at this problem not with a financial engineering lens, but we came from a lens of how can we provide the right sort of non-financial support to make these businesses grow. And I think that's what's been advantageous in this space, because actually finance is probably one of the last things that these businesses need. They need a lot other types of help before they actually even know what finance they need and how much they need.
Sia, talk to us about the experience of being a BE investor in South Africa these days. There have been some interesting trends, and not just a BE investor that obviously is black, but also comes with cash and serious skills. Has that, how's the experience and what's the reception been?
Yeah, I think it's become easier for us, I think purely being in the environment for close to 12 years or over 12 years now. So I think the brand or media capital is recognized. So it's easier when you come across the table. Some people, whether it's introduction through the network or through our portfolio companies, it's easier. That's as we've seen as a player that's not only bringing the capital, not only bringing the empowerment points, but also bringing capital and certainly expertise in terms of growing businesses. But I don't think it's been a challenge in the last few years. I think people do see us as a private equity investor who's got the added bonus of bringing in empowerment points. We contrast that to maybe experience when we do travel outside of SA, when we go to Zambia or Kenya. There, people, the companies there are looking for capital, and that's about it. The questions that you do receive are along the lines of, how many board meetings do you want to attend? When are you coming up? And that's it. They just want your cash. But I think in South Africa, there is a recognition that we are a private equity investor, but we've got the added bonus of bringing empowerment points. But over and above that, I think where BE is going is that it's going a bit beyond the ownership pillar. So they do recognize that there's still a lot of work that needs to be done within the organization and also in terms of enterprise development and the like.
Do you feel that there's an appreciation within the assets that you invest in that, you're bringing all this relationship capital, you're bringing all this business philosophy, financial expertise, governance expertise, the ability to quickly build platforms and make decisions. There's so much intellectual capital, for want of a better term, that private equity brings to the sector. How much of that do you think has been utilized by the assets that you invest in?
Yeah, there's no doubt. It's a lot of companies in the portfolio that do tap into it, but I think every portfolio company is different. So sometimes you find businesses that are been carved out of big corporations or listed companies, and certainly they, in terms of strategy and routes to market, they're a lot more comfortable getting there. But then on the other end, you get smaller businesses such as Medipost, which we profile on the Compendium, which is a mom and pop shop, a husband and wife shop, and they're good at getting pharmacists, they're good at speaking to medical aid schemes, but in terms of growing a business from 400 staff members to 1,300, they're not comfortable with that particular transition. So I think that's where we came in and assisted them. And that being said, we also learned a lot from them. A point that you raised about tapping into capital through the DBSA in terms of the jobs fund, which I think you guys are also working on in terms of the next phase. Something that we learned from the company, which we are trying to roll out to other portfolio companies when the program opens up to other sectors such as technology and the like.
Do you feel that these types of debates, these types of reports, these initiatives of SAVCA in terms of raising the profile of private equity and the good work that we're doing is going to lower your cost of capital, make it easier to attract these sums of money that will enable you to make this difference?
Yeah, James, I guess most of us in a vantage point, because we sit in SAVCA and we see the efforts that Erica and the regulation subcom and the asset class promotion subcommittee are doing, and it's a lot of work, not just bringing the existing LPs closer to the GPs, but also trying to sell these asset class to trustees and consultants, and then also to pension funds that are not currently looking at private equity. So definitely, I think the association is doing a lot, and certainly I think it should be applauded. Yeah, maybe there's a bit of a bias as a board member, but I think a lot is being done by the association, and certainly using these these platforms, and certainly using a compendium like as we have provided last year, I think is positive, because you're selling the other social, or rather selling the other pillars of private equity as in terms of what we're doing, not just chasing the 30% or whatever our targets that you've got, but also looking at the social impacts of our investments. So certainly I think it does bring in a different pool of investors, but also those that are really focusing on social investments, that they see that the asset class does promote those kind of pillars.
Yeah, maybe two comments there. The first comment, more a personal comment around the asset class that we're in, and that is just trying to prove to the world, and starting off with South Africa, that actually you can invest in this missing middle, and it can be sustainable, and you can create jobs, and you can build businesses that can be integrated in supply chain and not put supply chains at risk. I think we've got this, a lot of people see it as very negative, and I know there's certain elements of the BE codes as negative. I mean, I think there are a lot of extremely positive elements of the codes, and in particular, we're very biased about the Enterprise Supply Development Code. And the reason being is it's creating a tailwind to build models that can create sustainable investing in this job creation hub of any economy. And it's not only going to be something that can be used here, it can be transported to the rest of Africa. So we really are pioneering a space that is something which can speak to so many issues that a lot of economies throughout Africa face. So that's the one element, and that speaks to the personal lens. But I think the other thing which I realized reading through this book, and I'm not as exposed as a lot of the other people around the room to what private equity does, and that is that being an impact investor, you kind of assume that that's at the core of your business. But actually looking at any of the GPs or any of the private equity funds and what they do, in the core of private equity, there is this force for good. And I know that's cliched, but actually if you look at the number of businesses that you had to choose between to get to the Compendium, and this was the first year of the cycle, it just shows that actually there is fundamentally a model here which ticks a lot of boxes, and I look forward to how this can be the platform for next year's survey, and it can really just grow from here.